My name is William Gallagher. I'm coming to you live here today from the Market Traders Institute here in Orlando, Florida. I'm actually going to show you today my quick start Forex program. I'm going to put everything I'm about to show you here today in your hands. By the end of the next 45 minutes, you'll get everything I show you here today for about the cost of a pack of gum to take it for a test drive here today. And I'm also going to teach you and show you some of the basics on how to be a Forex trader. Plus, I'm going to go over a trading strategy for you here today. Now, before we begin, because we are going to be pulling up the charts, I am going to teach you a trading strategy. I'm actually going to show you a trade that I'm actually looking at, and I'll explain to you why I'm looking at it. But before we begin, I do want to let you know that it is recommended that you go through our entire education and you begin trading as an educated and knowledgeable trader. Now, as I mentioned, I'm going to pull up my charts. I'm going to go into the charts here. I'm going to teach you a trading strategy, but ultimately, when it comes time for you to place a trade, that decision to make that trade is going to be yours and yours alone. So today's agenda, like I said, is that I'm going to go over some of the market basics here, take a minute or two for those of you that are brand new to the Forex market, get you quickly up to speed on what the Forex market is. I'm going to pull up my charts. I'm going to teach you a very simple trading strategy. It's called the London Daybreak trading strategy. Get this in your hands here today so you can learn how to actually get into and out of the market very quickly, very easily. I'm also going to then show you some of the analysis here with my charting platform, show you some of the automated tools that are built into the charting platform. Plus, like I said, I'll show you the current trade opportunity that I'm looking at, show you how I analyze the market and why I'm looking at it. By the end of the webinar here, I'm going to show you how to set up a demo trading account. Plus, more importantly, like I said, for about the cost of a pack of gum, you'll get to take our charting software. You'll get everything I'm showing you here today to take for a test drive here today for a trial. I'll go over that here in just a second. So, as Renee mentioned, my name is William Gallagher. I'm from Market Traders Institute. I am one of their Forex experts here. A little bit about my background. I've been trading in the investment market since about 1998, about almost 19 years now. I've also worked for several different financial companies and firms. I also did help start, launch, and build an entirely new financial services company from the ground floor up. So one of the things I want to mention is that I have the financial background mostly in stocks and options. I did know about the Forex market, but I didn't understand the potential until I was sitting in a webinar, just like you are here today, one of MTI's webinars. I started becoming interested in the Forex market. I then became a student of Market Traders Institute, and then Market Traders Institute, they came to me and they wanted me to start doing presentations like this to help getting new people up and very quickly in the market here. So for those of you, you may have seen one of my colleagues earlier today, Tyson Clayton. He was talking about our leveling course. I'm coming to you live from the Market Traders Institute here in Orlando, Florida. The building you see on your screen right here, this is actually our building. I'm broadcasting out of that building live here today. It is a 70,000 square foot training and trading facility. We have students that come to our building on a daily basis. They literally get trained right in our classrooms here. The neat thing about our education, though, is that you can learn how to do all of this right from the comfort of your home, right on your laptop or your computer. The education is available online as well. We've been around for 22 years, actually celebrating our 23rd anniversary here in April. We're having a big 23rd anniversary event here. I'll actually talk about some of the speakers that are going to be coming here. We have Kevin Harrington from Shark Tank. We also have a lot of others that are great as well. I'll go over that here in just a second. But MTI, been around for almost 23 years now. We've trained almost 40,000 students on how to trade. We're getting some accolades. Some of you might recognize this logo right here in the bottom right-hand corner of my screen, Inc. Magazine. Inc. Magazine, 2015, ranked Market Traders Institute as 1,180 on their fastest growing private companies. Last year, 2016, we were ranked 592. We got this nice little letter here from Inc. Magazine letting us know that we share the same pedigree with Intuit, Zappos, Under Armour, Microsoft. We're hoping to break into the 500 this year. It seems very realistic that that's going to happen. As I mentioned, Kevin Harrington is going to be coming to our 23rd anniversary event. He's going to be one of our speakers. Les Brown, some of you might know him, another big speaker as well. But those of you that know Kevin Harrington, he is one of the original sharks from Shark Tank. Oops, sorry about that. He came to our office, liked what we did here, and he has partnered with us in a program that we have called, it's called Trade Like a Shark. So those of you that know Kevin, he's worth about $450 million. likes what he sees here, liked our trading style here, so he's actually partnered with us as part of this as well. So neat thing about that is we're getting like a lot of this notoriety. But enough about us, enough about me, enough about Market Traders Institute. Before we go into the actual markets, if everybody just quickly look at the screen right now, give me an idea of what your Forex trading experience is. I don't want to spend a lot of time explaining things if a lot of you already know. So if you are brand new to this market, if you have no experience whatsoever, you might not even know what the Forex market is, please type the number 1 into the chat box. That's going to let me know you are brand new, you have no experience whatsoever. Okay, yeah, looks like we got a couple here. Thank you, Ethan. Ethan's brand new. Jacob, Thomas, great. So if you have a little bit of experience in this market, maybe you've been to a couple workshops like this, maybe you're trading in a demo account, please type the number 2 in. That's going to let me know you have some intermediate experience here. So that's Henry, Joseph, Thomas, John, great, I appreciate that. Now, my more experienced traders, those of you that already have experience in the Forex market, type the number 3 in. Let's see if we got anybody here that is an actual active Forex trader here. So, okay, so we got one, Montgomery, looks like the only one, but we got a lot of you guys here. Joshua, Wade, Fernando, looks like a lot of you are brand new. So, like I said, don't worry. For those of you that are brand new, stick with me here. I'm going to get you up to speed very quickly in the Forex market. In fact, I'm going to take the next minute or so here. I'm going to explain to you what we're doing in the Forex market, what we're doing when we're trading Forex currencies. I'm going to explain to you what a pip is and why you want them. More importantly, like I said, I'm going to go into the charts. I'm going to show you how to get started very quickly trading in this market here. So for those of you that are not familiar with what the Forex market is, it's the foreign currency exchange. It is the largest financial market with almost limitless amounts of liquidity. There's about $5 trillion that is daily traded in this market. So just imagine gaining education, gaining experience in this market just to get a fraction of that here. Another neat thing about the Forex market is that it's a very flexible market. Like I said, it's very liquid. It's very easy to get in and out of this market very quickly, but also flexibility regarding trading in this market. There are 3 major trading sessions in the Forex market. You have the Asian session, you have the London session, and you also have the New York US session. These sessions, they overlap. So the neat thing about this is that you can actually, neat thing about it is that they overlap, so you can literally trade this market 24 hours a day, 5 days a week, from 5 o'clock p.m. Eastern time on Sunday through 5 o'clock p.m. on Friday here. So very easy, it's very flexible to trade in this market. One more quick thing. The neat thing about the Forex market is that it allows you to focus. Unlike other markets, like the stock market, there's thousands and thousands of stocks you can watch and trade in the stock market. In the Forex market, it's really broken down into about 60 different currency pairs you can actually trade. The neat thing about this, because MTI has almost 23 years of experience in this market, we're actually going to break it down even further. We're going to show you which currency pairs to pay the most attention to, and we're also going to teach you the secrets to trading them. When I pull up my charts here, I'm actually going to show you 6 different currency pairs on 6 charts here. So it's going to be very simple, very easy to focus in this market. So what I'm going to do is, before we pull up my charts, let me quickly explain to you what we're going to be looking at on these charts. What we're going to be doing in the Forex market, like I said, is we're trading one country's currency against another. Now, this is an attempt to figure out which one's going to gain in value against the other. So in this case here, this chart, if you look in the upper left-hand corner of my screen up here where this yellow arrow is, you can see that this is the Great British Pound, GBP, US dollar, USD currency pair. So in essence, what we're looking at on this chart is we're trading the Great British Pound versus the US dollar. Now, as the market's going up, the Great British Pound is gaining in value over the dollar. When the market's going down, the pound is losing in value over the dollar. Now, some of you might be wondering, well, what are these rectangles on this screen here? If you've ever heard of what's called a candlestick chart, these are called Japanese candlesticks. These Japanese candlesticks, they represent the time frame on your charts. They represent what the market has done in whatever time frame you select on your chart. So in this case here, in the upper left-hand corner of my screen, once again, you can see that we have 1 hour. So what that means is that each one of these candlesticks is going to represent what the market has done in 1 hour of time frame. Now, I don't have a lot of time to explain all these candlesticks here, but all you really need to know is that the white candlesticks, if you're taking notes, write down that they are bullish candlesticks. They mean that the market went up and closed up during that 1 hour time frame. The dark blue candlesticks are the bearish candlesticks. They mean the market went down and closed down during that 1 hour of time frame. Now, one more quick thing about these candlesticks, which I'll pull up in the market as well. We teach our students how to identify candlestick formations. We consider these candlestick formations the sign language of the market. They help to tell the trader's story. In the bottom left-hand corner of my screen right here, you can see this is a Morningstar candlestick formation. What this is telling the trader is that, hey, look for this market to U-turn and go upward in a bullish movement. At the top of my screen, this is an Evening Star candlestick formation. Once again, sign language of the market, giving the trader a signal saying, hey, look for this market to U-turn and go downward in a bearish movement. Now, I don't have a lot of time to explain candlestick formations here today, but the neat thing about our charting software that I'm about to pull up, it'll actually identify candlestick formations for you automatically. I'll explain that here in just a second. One more quick thing we need to know before we go into the charts. Let me quickly explain to you what we're trying to accomplish in this market. We are trying to capture pips. Now, PIP, P-I-P, it's an acronym. It stands for price interest point. So very quickly, let me break this down very simply for everybody. I'm pretty sure everybody here in the room, you probably already know that there are 100 pennies in a US dollar. A penny represents 1/100th of a US dollar. If we were looking for a unit of measure that's smaller than a penny, it would be the equivalent to what is called a pip. So if we look at this number right here, the first two numbers past the decimal points, these are your pennies. The next two numbers, these are pips. So just as a penny, there are 100 pennies in a US dollar, there are 100 pips in a penny. So a pip, it represents 1/100th of a penny. Very simple. Now, how do we make money in this market? We utilize leverage. This leverage is going to give you more buying power in this market. Now, what I mean by that is this leverage is going to be provided to you by your broker. The broker is going to allow you to place the trade and generate a leveraged return on your pip. So let me quickly explain to you what I mean by that. There are three different lot sizes. We trade in lots in this market. There are three major lot sizes. We have what's called a micro lot. If you're trading it with a micro lot, that is about a $20 investment per trade from your trading account. Each pip that you capture is going to be worth about 10 cents. So when we pull up our charts, we're going to be going after 50 pips per currency pair per day on the low end. That means if we capture that, we'll generate a profit of $5. Now the next size up is called a mini lot. A mini lot is about a $200 investment per trade. It comes from your trading account, from your brokerage account. Each pip is going to be worth about $1. In this case here, if you capture 50 pips, we're going to be going after $50 per currency pair per day. Now a standard lot is the standard by which most traders strive to achieve in this market. A standard lot is about a $2,000 investment from your trading account. Each pip is worth about $10. So we capture 50 pips, we're generating a profit of about $500 here. Now, here's the thing about this, something special for everybody here today. I know some of you might be saying, well, William, I don't have $2,000. I don't have $200 per trade. Well, some of you might have $20 per investment per trade, or even better, I'm going to show you how you can actually set up a demo trading account where before you even invest any money into a broker account, I'm going to show you how you can set up a demo account, practice doing what I'm showing you here today. The neat thing about that is that when you become comfortable, then you can go ahead and start investing. You might start trading with a micro lot account. As your confidence level builds, as your account level builds, we'll get you to the point where you start trading with a mini lot account, and then once again, as your confidence level builds, your account level builds, we'll get you to the point where we start trading at a standard lot level. I'll come back and I'll explain all this a little bit more detail once we actually go into the charts. One more quick thing we need to discuss before we go in. One of the people I want to introduce you to, his name is Joshua Martinez. Those of you that don't know who Josh is, he's one of our product experts here. He's one of our experienced traders. He has trained thousands of Forex investors. He actually started off trading. He had put an initial deposit investment in his trading account and generated over $39,000 in profit off of it. He's made thousands of Forex investments. He's a published author, international speaker, and so on. Now, the reason I'm talking about Josh is because he is the gentleman that actually created the London Daybreak trading strategy I'm about to show you. In fact, I actually need to update this chart here, but this is actually a third-party verified trading account here. from MyFXBook Pro. He's actually up a lot more than this. I think he's up at least 38,000 pips just last year. So he has some experience, and he has definitely a track record to back this all up. So the neat thing about this is that I'm going to give you a Cliff Notes version of how this London Daybreak trading strategy works. Get you up to speed. You can take some notes here today. But more importantly, you will get, as part of this trial here today, you're going to get a video from Josh where he goes into more detail explaining his London Daybreak trading strategy. So let's get very quickly in this market. If you have a pen and paper, you might want to start taking some notes because right here, these are the 6 currency pairs we're going to be utilizing for this Daybreak trading strategy. We're utilizing the Great British Pound Canadian dollar, the Great British Pound US dollar, the Great British Pound Japanese yen, Great British Pound Swiss franc, Great British Pound New Zealand dollar, the Kiwi, and the Great British Pound Australian dollar, the Aussie. Now, as I already alluded to, our goal is to go after 50 pips per currency pair per day with the simple trading strategy I'm about to show you. So that's going to give you 5 times a week. You're going to have 30 opportunities each and every week to utilize this trading strategy here. So let's go ahead, let's get started. I don't have a lot of time, so let's jump into the charts here. In fact, actually, right here you see the trade I'm about to show you after I show you the Daybreak trading strategy. But as I mentioned, these are, you should see 6 currency pairs, 6 charts on your screen right now. Up in the upper left-hand corner, this is the Great British Pound Japanese yen. Center is the Great British Pound Canadian dollar. Upper right is the Great British Pound Swiss franc. You got this bottom left is the Great British Pound New Zealand dollar. Middle one bottom, Great British Pound Australian dollar, and the Great British Pound US dollar. As I mentioned, they are all on a 1-hour time frame. So what that means is that each one of the candlesticks on these charts is going to equal 1 hour of what the market has done. So let's go ahead. I'm going to demonstrate this for you here on the Great British Pound US dollar. But before we go in and actually show you the strategy, let's go ahead. Let's talk about what we're doing here. I'm going to pull this down here. And here's what we're looking to do. What we're looking to do is this. We're going to start off. We're going to be looking for the initial high or low for the day on this each one of these currency pairs between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. 5 o'clock a.m. Eastern Time. Now, what I mean by this is that we're either going to be looking for the market to pull back and form its low for the day between this time and then rally up and give us directional bullish movement, or we're going to look for the market to form its high for the day and then give us directional downward bearish movement here. So we're looking for that initial high or low for the day between 2 o'clock a.m. and 5 o'clock a.m. Eastern Time. Now, the reason for this goes back to what I talked about at the beginning of the webinar. There are 3 major trading sessions in this market. You have you have the Asian session, you have the London session. So what you have going on here is that you have the close of the Asian session and you have the opening of the London session. So you have that overlap going on right here. Now we're looking, in fact, let me go ahead, and what we're looking for opposite this, we're going to be looking for the opposite high or low for the day. We're going to be looking for this between 8 o'clock a.m. Eastern Time and 2 o'clock p.m. Eastern Time. So yeah, Thomas just asked, should I be taking notes? Yeah, here's the neat thing about this is that you'll be getting a video with all this, my friends. I'm kind of giving you Cliff Notes version of this. So yeah, if you want to take some notes about this, go ahead, take some notes. This is part of the strategy here. Now, while we're looking for that, between 8 o'clock a.m. Eastern Time and 2 o'clock p.m., you have the close of the London session, and then you have the opening of the U.S., the New York session here. So what we're looking for is we're looking to take advantage of this directional movement, either going up or going down. So that's the basis of this. Now, what we have found is this directional movement here is that we found that each one of these 6 currency pairs has what's called the average daily trading range. What that means is that each one of these currency pairs, we're looking for them to move a minimum of 50 pips on the low end to over 200 pips on the high end. So my goal here today is to show you how to get onto first base, how to go after those initial 50 pips. Now, Josh in his video, I believe he'll show you how to go after the more than that. He'll show you how to move your stop loss up. He'll show you how to go after more than that, but I'm just going to go ahead and show you here how to be able to do this just like that. So what we're looking at here, like I said, if we want to evaluate that as what type of results we're looking for, if you're trading a micro lot account, each pip is going to be worth, what is it going to be worth? It's worth 10 cents. That means you're going to be looking to generate $5, around $5 in profit per currency pair per day. With a mini lot, you'll be looking to generate at $1 per, around $1 per pip, about $50 per currency pair per day. And then the standard lot is the nice one. That's the one where it's $10 per pip. That would be $500 per currency pair per day. Now, somebody just asked a really good question here. Ricardo just asked, will we be trading this strategy each day? No. The neat thing about this is that I believe Josh, in his video, he's going to show you, kind of give you an idea of which days not to try here, which days you're not going to want to do this. So if everybody has this written down or do a screenshot of this, like I said in that video, Josh is going to give you this all, he'll be able to go over this all one more time. So let's go ahead, let's go into the charts and let me show you exactly what I'm talking about. I'm actually going to show you and demonstrate what we're looking for in this market here. So what I've done is I've come in here and I've highlighted the points of these movements here, that directional movement here. So, oh yeah, somebody just asked here, yeah, so we got Wade here asking here, what is this called? This is called the London Daybreak strategy, just like that here. So what we're looking for is that directional movement between 2 o'clock a.m. and 5 o'clock a.m. So if you see here, here's this movement right there. This was about 65 pips right there. We had directional movement here of about 53, not a very big one. We got this one right here, directional movement about 72 pips. This one right here was about 95 pips. This one right here, we got some directional movement about 51. This one right there, actually, if we were to bring this, if we just go straight up, that's about 74. But if we take advantage of that whole movement, that was 149 pips of movement. Coming down, 78 pips. I apologize for that. Jack just asked, how am I doing this? I'm showing everybody here. In fact, actually, let me explain you what you're looking at. This is actually the charting software you're going to get to take for a test drive, a trial period here today. What I'm using right here, this is called our ruler tool. So we can come in here, we can simply just drag this and measure. In the upper left-hand corner of my screen, you can see the range. That's the pips. So that was 72 pips of movement off of this one. This was another little one. That one only moved about 21. So they're not all going to be winners, but you'll see the directional movement I'm talking about. This one here was about 46, or if we bring it down here, 100, and then this one right there was about 75. So let's go ahead, let's take this back about a week or so. And if you're taking notes, this is going to be a good time because we're actually going to go into the market. Let me zoom in. Hold on 1 second here. Let's bring this over. I'm going to zoom in nice and tight on this, make this nice and big for everybody. Let's zoom in a little bit bigger here. Just like that here. So this is the London Daybreak trading strategy. Now, one thing about the London Daybreak trading strategy, let me go ahead and give you a little bit another nugget of this. We're going to be looking for, to start this off the close of the 3 o'clock a.m. Eastern Time candle. So this is going to be based off the close of the 3 o'clock a.m. Eastern Time candle. So essentially, if each one of these candles, it represents 1 hour time frame. If we start here at 3 o'clock a.m., essentially you will be starting this at 4 o'clock. Now, I'm going to show you, like I said, a Cliff Notes version of the strategy. Josh will go in, he'll show you how to get in before the market, before 4 o'clock, what to look for in the market, that sort of thing. But what I want to do is, before we actually jump into this here, because I'm also going to talk about this when I pull up the charts here and show you that trade I'm looking at, the current trade. As a trader, we're looking for 3 things. Before we place a trade, we're looking for 3 things. Number 1, which direction is the market going? Number 1, is it going up or is it going down? Number 2, where and why to get into the market? And then number 3, where and why to get out. So as an experienced trader, you're going to be able to answer each one of these three questions before you get into the trade. Which direction is it going, where and why to get in, and where and why to get out. So obviously you can't predict this each and every time, but you need to develop some sort of educated opinion. So the London Daybreak trading strategy here is going to help us answer each one of these questions very quickly here. So let's go ahead, let's zoom in here, and let me show you how we're going to answer question number one. Which direction is the market going? Here's what we're going to do. At the close of this 3 o'clock a.m. candle, right there, 3 o'clock a.m., we're going to do two things. We're going to place two pending orders. We're going to have one pending order above the high of that candle, 10 pips. So if the high, which is that candlestick wick right there, is at 25.78, we're going to set this at 25.88 right there. And I'll type this out. This is going to be an entry buy position. It's a pending order. We're not in the market until the market triggers this here. Now that entry buy is going to be plus 10 pips above the high. Just like that. So there's our entry buy set 10 pips above the high right there. So yeah, Nick, just like I said, that candlestick wick right there, that's the high point, 10 pips above that high. We're going to set another pending order 5 pips below the low. So 25.65, so we set this at 25.60. And this is going to be our entry sell. And what that's going to be 5 pips below the low. So yeah, the low is that candlestick wick, 5 pips below. Now, once again, these are both just pending orders. We're not into the market until we get triggered into one of these two different opportunities here. So this is going to help us answer question number one and help predict that directional movement that I'm talking about during this London Daybreak trading strategy. So we have our entry buy, entry sell. Let's see what happens here. So 1 hour later, bam, the market, it rallies up and triggers our entry buy. So our entry buy right now, this now just became a market buy. Automatically just became a market buy. What that means is that, in fact, let me pull this down just a little bit. What this means is that we now have that educated opinion where we believe that directional movement I was telling you about, we believe it's going to be bullish. It's going to be going up, just like that here. So that takes care of question number one, which direction is the market going, and number two, where and why to get in. We're now in the market, buying the market, because we have an educated opinion, we believe it's going to be going up. Now, once we get triggered into one of these positions, the first order of business is to come in and cancel the opposite order. We believe the market's going up. We don't want to sell the market. In fact, actually, yeah, that was something Jay just asked if we could short the market. Jay, I'll get to that here in a second, but yeah, absolutely, we can teach you and show you how to short the Forex market as well. In fact, I'd say probably anywhere from about 65, 70, maybe 75% of my trades are probably shorting the market versus buying. So just stay tuned. I'll actually show you how we short the market. Now, next order of business, after we cancel that order, we have to come in here and we have to protect ourselves. We need to set a stop loss. Now, here's something that's a little bit different here. You're going to want to take some notes on this. We're going to set our stop loss at the low of that 3 a.m. candle. It's a little bit different here. So stop loss when buying into the market. Stop loss when buying into the market is going to go at the low. It's a little bit different. Some of you have been asking here, why 5 pips below, 10 pips above? I think Josh will answer that in those videos here. I don't really have a lot of time to get into that, but all you need to know is that we're going to set our stop loss at the low. Stop loss when buying the market is going to be at the low of that 3 a.m. candle. So that's going to protect us if the market goes against us. So in this case right here, if I pull up my ruler tool, we are risking on this trade. We will be risking on this trade about 23 pips. So not too bad. Now, if you remember, we have to figure out where we get out of this trade. We have two different ways of getting out of this trade. If we move this over down there. So we need to figure out where we're getting out. That's going to be our target, which is going to be our exit, which is also known as our limit. This is going to be one of two different things. It's either going to be a 1-to-1 risk ratio, or number two, it's going to be a minimum of 50 pips. So in this case right here, on this trade, we're risking 23 pips. That means we're going to be going after. It doesn't fulfill the one-to-one risk ratio. We're going after 50 pips. So I pull my ruler tool and we measure 50 pips, which is going to be right about there, 26.39. So 26.39 right there. So we have our entry. We have our stop loss to protect us, and we have our target. So at this point, somebody just asked a question. Actually, I think two of you just mentioned a point saying, well, do we have to be up at 3 o'clock, 4 o'clock a.m. to do this? Yeah, if we live on the East Coast, yeah. So yeah, you'll have to be up early, but take a look at the results I'm showing you here. In fact, at this point, once you set all this up in your broker's platform, you can go back to bed. At this point, it's all going to be automatic. You're either going to get taken out with a 23 pip loss, or you're going to get taken out with a 50 pip win. Now, Josh will show you how to go after more than those 50 pips. I'm just showing you how to just get in very quickly and get out of this market. So let's see what ends up happening here. So 1 hour later, 2 hours later, we were right. That directional movement did in fact go bullish, and we did in fact capture those 50 pips. So that was about 50 pips in about we'll say 3 hours. In 3 hours. So if we were trading with a mini lot account at $1 per pip, you just made about $50 of profit in about 3 hours. If you're trading with a standard lot account at $10 per pip, you just made about $500 in about 3 hours. Not too bad here. So there's our first trade. Let's go ahead. Let's move on to the next. Let's clean up our charts just like this. And yeah, some of you are asking some good questions here. I'm not avoiding your questions. I just have a lot to get through right now. I promise you, I'm probably going to be answering a lot of them as we're moving forward here. So there's one trade. Let me go ahead. Let me show you another one. Let's advance this here. Let's pull this back. Yeah, some of you are asking some questions about the charting. Yeah, the charting, like I said, you'll get to take this for a trial. Some of you have been asking about these little boxes. I'll explain what these boxes at the top mean here in just a second. So that first trade, not too bad, in about 3 hours, captured 50 pips. And we got to move this forward one more day. So there we go. So 3 o'clock a.m. There's our 3 o'clock a.m. candle. Let's pull this down. Just like that. In fact, here's what I'm going to do. I'll make this a little bit bigger. Make sure that everybody can see this nice and big. Just like that. So 3 o'clock a.m. Let's go ahead. We do the same strategy. I'll type this out for everybody once again. So first, we do our two pending orders. So 2700. We're going to set this at 2710. That's once again going to be the entry buy pending order plus 10 pips above the high. And then we're going to come in here, we're going to have an entry sell, which is going to equal, 5 pips below the low. There we go. Let's move that over, and we'll come in here, we'll draw a line. So the low is 2660, so we're going to set this at 2655 right there. So we have our entry buy, entry sell. Once again, that's going to help us answer question number 1. Which direction do we believe the market's going? Do we believe it's going to be going bullish or bearish? So let's see what ends up happening here. So 1 hour later, 2 hours later, the market pulls back just a little bit. Doesn't get triggered into entry buy, but we did get triggered into our entry sell. Apparently the market decided it wanted to go bearish on that one. So our entry sell just became a market sell, meaning that we have that educated opinion where we believe the market's going down. It's going to give us that bearish directional movement here. So I think that answered, I think it was Jack that asked that question. Yeah, so we're now at this point, we are shorting the market. Those of you that are not familiar with how to short the market, we can teach you and show you how to do that here. So there's our entry. Now once we have our entry, we need to cancel our opposite order. Once again, educated opinion, we believe the market's going to be going down. Now here's the little bit difference here. We need to set up our stop loss. Now in this case here, our stop loss when selling the market is going to go 5 pips above the high. So what did we determine? So there's 2700. So you need to go 1, 2, 3, 4, 5 right there. There's our stop loss. Type that out. Stop loss, and this is when selling. A little bit different. It's going to go plus 5 pips above the high. Once again, I know it's a little bit different than what we did buying. I think Josh explains it in the video here. So you can get that video from him. He'll go into a little more detail about that. So our entry, stop loss protection. Let's take out our ruler tool. Let's see how many pips we're risking on this trade. Let's see here. We're risking 48 pips. So if you remember, our target, which is our exit from this trade, or our limit, is going to be one of two things. It's either going to be a 1-to-1 risk ratio, or number 2, minimum of plus 50 pips. So what I say we were risking on this one, 48. Let's see, we're risking 48. 49. So what that means is that we're going after a minimum of 50 pips. So let's come in here and let's measure out 50 pips. So our target's going to be right there, 2606. 2606. So we're going after 50 pips. So we have our entry, stop loss to protect us, and we have our limit set. So we're risking about 49 pips going after 50. Let's see what ends up happening here. 1 hour later, 2 hours later, bam, huge directional movement going down. We got those 50 pips again, 50 pips. Now, once again, that was 50 pips in about 2 hours. At this point, once you set this in your broker's platform, you would be asleep at this point. You wake up the next day and see you just got another 50 pips off of this one. In this case here, with that mini lot, you just made another $50 on that one. Standard lot equals 500 on that one, just like that. So not too bad here. So what I just showed you guys here, this is the basics of the London Daybreak trading strategy. Like I said, it's kind of my own Cliff Notes version of this here. Now, here's the thing. Watch what ends up happening here. I do believe the market continues to go down even further here. Look at that. It ends up going down a total of, it maxes out here somewhere around 146 pips. So Josh, I showed you how to go after 50. In that video, Josh will show you how to go after more than that here. So like I said, what I'm showing you here is a Cliff Notes version. In fact, let me pull that up here. Before we move forward, I'm actually going to pull this up. Here's the actual video you will be receiving. Cliff Notes version, just like I showed you right here. He'll go into details showing you exactly what I'm showing you here as well. Plus, he'll also show you how to go after more than that by moving your stop loss. And now there's some tactics here, strategy here, and showing how maybe using some analysis and deciding whether you want to take the trade or maybe you don't want to take the trade that day. So I just want to go ahead and point that out. You'll get this video. Josh is going to go into much greater detail on that. Now, for those of you that were wondering, once again, I just showed this on the pound US dollar. That's the strategy. You can use this on the pound Japanese yen, pound Canadian dollar, pound Swiss franc, pound New Zealand dollar, pound Australian dollar, and the pound US here. In fact, I think you actually get the workspace for that. Now, what do I mean by that? If you look at the top of my screen here, these little rectangles, these are called workspaces. That's the neat thing about our charting platform here is that you can actually, oops, hold on one second, my friends. Okay. Yeah, you can go up here, you save workspaces. You can save your charts as workspace. I think Josh actually gives you this London Daybreak trading strategy workspace. What you do is you can come in here, you can import it, or if you make your own, you can save them to your computer, or you can save them to the cloud. The neat thing about that is that if you were to, hold on a second. Sorry about that. My phone keeps going off. Yeah, you can save it to the cloud. If you work on multiple workstations, you'll be able to pull up these charts on multiple workstations here. So that was the London Daybreak trading strategy. Like what I said, it gives you 30 opportunities each and every week. So how many of you think that you'd be able to get 1 or 2 of these each and every week? Especially if you have Josh in this video teaching you and showing you how to do that. Because like I said, as part of the charting software, in fact, like I said, everything I'm showing you here today, you're going to get to take for a trial. That video that I showed you from Josh, the creator of the strategy, you're going to get that as well. So what I'm going to do right now is I'm going to go back into my charts. I promised you I would show you a trade opportunity I'm looking at right now. And I'm actually going to show you how to use some manual analysis on the charts. I'll show you why I'm looking at this trade opportunity, and we'll do some basic analysis here. In fact, our charting software here, I'll probably demonstrate a lot of these tools. We have an auto Fibonacci tool built in, a auto trendline tool, a King's Crown tool, candlestick tool. The charting software, it'll show you. I can show you how to email or send you text alerts on trade opportunities or on opportunities here. I'll show you how to trade directly from the charts. Place your trades right from the charts. Cloud-based workspaces. In fact, we actually have some systems. I'll actually pull one of those systems up for you as well. And you're going to get a 14-day trial for this here today, like I said, for the cost of about a pack of gum. So let's go back in and let's pull that up here. Let's go ahead, let's pull up. There it is here. So we have what I'm showing you here. This is a trade opportunity that I'm looking at, and this is going to be on the Great British Pound, Japanese Yen on the 1 hour time frame. Now, here is where, obviously the market is closed right now, but this is where the current market is when it opens tomorrow. That's where it is. So let's go ahead and let me explain to you why I'm looking at buying an opportunity to potentially buy into this market. So let me show you something. If you remember, there are 3 questions. You remember those 3 questions I told you about? Number 1, which direction is the market going? Number 2, where and why to get in? And then number 3, where and why to get out. There we go. So let me show you how you can very quickly, using our charting platform here, answer each one of these 3 questions. So question number 1, which direction is the market going? Well, we utilize what's called trend lines. I can come in here and we'll teach you and show you how to draw a trend line. Now the trend line here, it helps to take some of the fear out of the market, because below this trend line, you will be in what we call the sell zone. As long as we're below this trend line, we're going to be looking to take selling trade opportunities. Above this chart is what we call the buy zone, meaning that when we're above this trend line, we're looking to buy the market. So as you can see, what has happened here, the market has bounced a little bit off that trend line, and then right here, it broke above that trend line, broke bullish above that trend line. So what I'd then be looking for is I have an educated opinion that I believe that the market is going bullish, so I'm looking for buying opportunities. Now, you can't, I guess you say you could just simply just jump into the market buying at this point, but that's not the educated way of trading. You don't have an educated opinion at this point of where to get into the market. So let's go ahead, let me show you how we're going to answer questions number 2 and 3, where to get in and where to get out. Let me delete some of this here. Let's delete this. Oops. Let's delete that. And we'll delete this here. In fact, let me turn off. Some of you are asking about these candlesticks. Let me turn these off because I'm going to get to that here in just a second. So we're looking to buy the market. So let's zoom in here. We're zoom in down here. And what I want to do is I want to show you and introduce you to a tool. In fact, let me pull this down just a little bit more. Let's put this at the bottom right there. I'm going to introduce you to now what's called the Fibonacci tool. The Fibonacci tool is going to help us take advantage of the wave movements in the market. In fact, what we have seen is that when the market is going up, what we're looking for is what's called an A, B, C, D pattern. And then when the market's going down, we're looking for that same downward, A, B, C, D pattern. Now, I don't have a lot of time to go in and explain Fibonacci's, but we have our own proprietary Fibonacci tool. Once we identify this A to B boundary like this, we spread that Fibonacci tool from the A to the B just like that. Now, these colored lines here, in between the A and B boundary, these are called, I'll go ahead and I'll type this out for everybody. These are called retracement lines, meaning that what we have found is that there's a high probability in between this A and B boundary that the market's going to pull back or retrace. What we are looking for is the market to pull back to one of these levels here, these red levels here, the blue or the green. So if the market pulls back and U-turns, I'm going to show you here how to identify a U-turn in the market in just a second. If it U-turns and forms this C point, at one of these red retracement levels. We're then going to look to, and if we buy into the market after that U-turn, we're going to look to get out of the market at our red extension. These lines above the B level, these color lines, are called extension lines, meaning that we are looking for the market to pull back or retrace and then extend. In this case here, we would be looking for that D point at this red extension, because what we've done is we've color coordinated our Fibonacci's like a buddy system, red to red, blue to blue, and green to green. So what the Fibonacci's do, not going into a lot of details about them, but they are hidden levels of support and resistance. They're going to help us to predict where the market's going based on where it's been. If the market pulls back to the blue retracement level and forms that C point, we would then, if we buy into the market after that C point, we look to get out at our D point at the blue extension, blue to blue, and if it pulls back to the green, right there, we would look to get out at the, at the green level, right there. Our D would be right there. So yeah, some of you ask about this. Once again, this is something exclusive to MTI. We teach our students how to set these colors up just like that. Now, once again, you can do this when the market's going up and when the market is going down. Same thing, A, B, C, D. A, B, C is at red, it goes to red. If it goes to blue, down to blue, and green to green. Now, here's the neat thing about this. I'll come into the market here. I'm going to demonstrate this for you. I'll show once how this works in the market and what we're looking for here. But the neat thing is that we have an auto Fibonacci tool that does all of this automatically for you. I'm going to show you that here as well in just a second. So we come in here to the market, and down here at the bottom, after the market U-turn starts going bullish, right here, in fact, let me delete this, clean this up, just like that, and I'm going to zoom in. So we have our A to B boundary right here. And we can teach you in detail what this A to B boundary means. In fact, you'll get a video from Josh teaching you a little bit more about how these Fibonacci's work. So there's our A point, there's our B point. So what we can do is we can come in here with our Fibonacci tool and spread it just like that. So watch what ends up happening here. The market goes A, B, forms its C point right there. C point's right there. Now, why is this our C point? Why do I believe this is a C point? If I come in here and I turn on my candlesticks, let's turn on all of our bullish candlesticks. Let's see if we have a sort of, okay, so then there we go. So bam, right there. This can either be considered a Morningstar candlestick formation or an engulfing bullish candlestick. So we would look to buy there. If it retraced to this red retracement level, we would look to get out at the red extension. You see what happened here? It U-turned, formed a candlestick formation. If we got out right there, if we bought at the close of that candle, got out at our extension, that trade would have been about 29 pips. Not the biggest one, but still just kind of demonstrate and show you how this works here. So I'm going to show one more quick example here. Once you have one Fibonacci sequence just like that, and then the market then does its next. A, B, C, D, and so on here. Now, I know for some of you this might be kind of confusing, but let me just show you what ends up happening here. We have A, B, C point. The market pulls back. There could have been a retracement here or here. Both were red, so we would then be looking to exit our trade at the red extension. You see what happens here? A, B, C, and then bam, D. It comes up, hits that level, and then starts becoming exhausted here. Now, once again, you're going to get a video that goes in more detail about this. Here's the neat thing about all this. We have a tool called the Fibonacci tool that I just told you about. It's exclusive. In fact, some of the things about our charting platform here, we've spent millions of dollars developing this. Let me go ahead. Let's bring this to where we are. So here's the neat thing about this, my friends. All you would have to do, if you want to open up this chart and quickly find it, see if there's an opportunity. You come in here, you can draw your trend line, just like I showed you here, just like this. Or for those of you saying, well, William, I don't quite understand how to draw a trend line, we also have our smart trend line tool. Watch this. We come up here to the beginning of this new trend, and then bam, it's going to quickly and automatically draw and accurately draw that trend line for us. So if I open up my chart right now, saw what I just did, I come up here, draw my trend line, I can then come up here, seeing I have a bullish opportunity. I hit my smart Fibonacci tool down here at the bottom of this, and then bam, it's going to quickly and accurately draw those Fibonacci's right to where we are. So here's our current A to B boundary. What happens? The market pulled back, gave us a shallow retracement, came up here, and then pulled back again. This is something we'll teach you, is that if the market doesn't pull back to around the 5.0 level, or even a 0.382, in this case it pulled back to the 0.382, right there, we now are looking for an opportunity. So what I'm looking for right now is I'm looking for a buying opportunity. What I'm looking for are two things. Number one, I'm looking for the market to either come down, or I'm sorry, go above. In fact, let me draw this out for you. I'm looking for the market to break above this trend line. Once again, giving me, it's called a counter trend line. I'm looking to buy if it goes above this. Now, another thing I'd be looking for is one of these candlestick formations. So I'm looking for a candlestick formation on the opposite side of this trend line. Now, if we find an opportunity like that and we buy, because we have a red retracement level, I'm going to be looking to get out at my D extension here. So this trade opportunity I'm showing you right now, let's just say we buy in right around here. And if it does go, in fact, up there, that's 137 pips right there. So once again, very quickly, what did that take? That took about 2 minutes here to see if we have a trade opportunity. We have to wait and see if the market opens up. So yeah, if you might want to do a screenshot of this, Great British Pound, Japanese Yen, 1 hour. Do a screenshot of this. Look for this to happen tomorrow. Let's see if this actually happens, and then you can then come back and tell me where it actually did. Now, here's the neat thing about this. Let's just say that the market was open right now, and let's say we found a trading opportunity. Let's say we want to go ahead and let's just say we want to buy the market right now. Here's the neat thing about this. I can simply just right-click on my tool here and hit buy. And if I want to do a market buy just like that, it pulls this up. We can show you how to link your brokerage to your trading account, or the charts to your broker, your trading account. You can set your stops, your limits, everything, hit OK, and bam, you're in the market just like that. Now, another neat thing about this is that let's just say that I don't want to sit in front of my charts and wait for the market to break above this trend line. Watch this. I can set an alert. And we'll teach you and show you how to do this. This is part of the trial as well. We can come in here and add an alert, and we can set this up to either send us an email or a text alert right to your phone. When it breaks above, you can pull up your phone, go to your broker's platform right on your phone, and you can place the trade if you want to and set everything up just like that. So a lot of neat things about this. And here, actually, you know what? Hold on a second, my friends. This is something I haven't showed in one of these investor inspirations before. Let's back this up a little bit here. Because I actually didn't realize that we were including some of these things in as part of this trial. So let's back this up here. Here's a couple of things. We are including systems as well. We have some custom indicators that we're going to include. I think there's about 4 or 5 of them. Let's see. We can set up, you'll get the stochastic RSI as part of this. This is our own formula here. There's our own formula right there. Or, let's turn that off. Here's something neat. I haven't shown this in Investor Inspiration before, my friends. We have what's called the Turbo Trader. Watch this. With the click of my mouse, I hit OK. And then bam. In fact, let me delete some of this. Here's the neat thing about this Turbo Trader. That trend line I showed you that we automatically draw, it automatically draws it for you. The blue line, this teal blue line, that's your trend line. Above this trend line, you're in the buy zone. Below it, you're in the sell zone. So look what happens here, my friends. Right here, when the market breaks below that trend line, gives us a red indicator. Red means sell. In fact, let me type that out. Green equals buy, and then red equals sell. So in this case here, you would sell on red, sell on red, exit on green. Very simply, this system here, you would have been able to get out with about 131 pips on that trade. Now this one up here goes up. You would have probably bought right here. And then when the market goes back down, you would have sold. So in this case, this trade here, you would have lost about 47 pips. Now, what did we say we just won on this one? We just won 133, and then we just lost 49. Now, what ends up happening, though, is that at this point, we're now selling the market. The market then goes below. We're selling the market red, 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 green. We're exiting our position right there. So we took a 47 pip loss. The next trade, will we just make back? About 367 pips on that trade. Turbo Trader showing you exactly what to do. Now, we're below the trend line in the sell zone. Green, 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 until right there. Right there, we're above the trend line, so we're buying again. So we buy, 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 and then we get red, and then we would sell right there. On that trade right there, that would have been 78 pips. So we had 1, 2, 3 winning trades, 1 losing trade of 47. You're going to get this as well, my friends. This is included as part of the trial. I'm so glad I got to show you. Now, here's another neat thing about this. I use this as part of my own trading program as well. Watch this. Let's just say that we want to, in fact, let's just delete all this. Let's turn the Turbo Trader system off, and let's turn that off. Now, let's just say we simply pulled up our charts here, and we were looking to see where we were. Well, we can come in here. Let's put all this together very quickly. We draw our trend line. Oops, we got to draw it. Hold on, let's draw that. There we go. So, bam. So trend line, we're in the buy zone. We come in here, we set up our Smart Fibonacci tool. Bam. And then we can turn on the Turbo Trader on top of that, just like this. So another thing I would be looking for is when this market U-turns above in our buy zone, I'm going to be looking for my green indicator. I'm going to be looking for the green indicator to come back on, just like that. And that's when I'll give you even more indication to buy into the market here. So I know I gave you a lot of my friends, but you're getting all this today. You're getting the charts, the Turbo Trader, all of this I'm showing you. It's all part of the program here. In fact, we actually have something nice here. We're giving you a 14-day trial here to take advantage of this for 14 days, the videos, the education that I'm about to show you here in just a second here. So normally, in fact, I recognize some of you from some of our other webinars from Market Traders Institute. You already know that to get the charting software, generally you have to be a student of Market Traders Normal. You don't normally have to be a student. It's only available to students. It's part of one of our either our Ultimate Traders package or one of our education programs. Normally the cost is about $240 a month for students on a month-to-month subscription. However, for investment inspiration here today, here's what we're going to do. Like I said, we're going to make it very affordable. You're getting all of this here today to take for a 14-day trial to test it out. You don't have to take my word for it. Play around with it, test it out for 14 days for $1. After the 14 days, if you decide you want to keep the charting, you want to keep all this, you're not going to have to pay $249 a month. We're actually going to lock you in for $59 a month, and that is on a month-to-month basis. So focus on the 14 days. Take this for the 14-day trial. It's only going to cost you $1. Within those 14 days, as long as you cancel, it costs you $1. We're also going to give you 3 free bonuses from Josh as well. So here's what we're going to do. Yeah, a couple of you are saying, how do we get this? Okay, I'm going to send this out to the link right now. I send this out to everybody in the audience. I'm going to send you out a link. This bit.ly link right here, you're going to click on that. In fact, oh yeah, hold on a second here. Let me type that out. 1 second here. There we go. So let's go ahead. Let me send that out to everybody. I'm going to type it out. So be looking for that. That's the first step. So let's send that out. And there we go. So let me send that out to everybody in the room. Hold on 1 second, my friends. So everybody should be getting that. That's step number 1. Hold on. Let's see if I can send that out. Oh, there we go. Bam. Okay, so there we go. I just sent the link out in the chat box. I sent it out in the questions box. That's step number 1. In fact, I'm going to walk you through the process. I'm going to show you behind the scenes right now of everything you're going to get. So step number 1 is click on that link, register for the charting software. Take it for the charting for a 14-day trial. So that's step number 1. Let's pull that up here. You're going to click on this link. It's going to take you to this page. Activate your 14-day trial. On this page, it's going to go into even more details. I'm about to run out of time here. But if you scroll down here to the bottom, it's going to detail everything, our disclaimer, all of this, how to cancel. I'll show you how very easy it is to cancel. All you need to do right now is click on the link, because this is only for investor inspiration. Click on this, get locked in 14-day trial for just $1. You activate this, you're going to probably receive 2 emails. You'll get one email letting you know that you are, in fact, part of the trial, and then you'll get another email that's going to send you out your login information to get logged in to get all this here. So what I'm going to do is I'm going to go ahead. let's go back in here. That's step number 1. Click on that link. Yeah, I got a couple of you here say, hold on a second, let me send that to you as well. There we go. So I'm gonna send that to you. Yeah, those of you, if you want the link, I can send it to you. There we go. Bam. You should see in the questions box, click on that link, register for the charting platform. Now, the next step, today, tomorrow, whenever, go ahead, view the training lessons for the charting in the London Daybreak. Let me walk you through that. You're going to get login information for this back-end portal. In the back-end portal, you're going to get these onboarding videos from Joshua Martinez, the creator of the London Daybreak. He's going to go through, show you how to set up a demo account, how to get in and out of the market, how to get his 3 free workspaces. I think that London Daybreak is one of those workspaces. He'll show you how to get those and how to install them. Those Fibonacci's, I didn't get a chance to go into all the details about that. Josh will go into detail showing you how to do the Fibonacci's. Now, that doesn't stop there because you get some lessons here. We're going to teach you how to navigate, go through the charts, navigate the toolbars, detailed videos about that, how to set those custom indicators up, and the auto Fibonacci tool, how to use it, and how to link your account to a broker. Now, you'll also learn how to back up all your work, how to deploy those systems that I just showed you, how to set up an auto trading system, didn't even get a chance to show you that, and the download station and navigating the toolbars. So all of this is included, plus each and every Friday from 10:30 to 11:30 a.m. Eastern Time, either myself or another of my colleagues, they will be hosting a live video session. For those of you that register for this, each and every Friday, you'll get in. I suggest you take this for a test drive, go through, take it for a test drive, take some notes. On Friday, you can ask a live instructor any questions you have about this. He'll demonstrate the charting for you, and he'll answer any questions you might have here. So register, click on that link, register for the 14-day trial. Right now, this is only for today and for right now. View the video training lessons. Now, here's the next thing. Set up a demo trading account. If you want to go live, that's your prerogative, but you can set up a free demo trading account. You can do it at forex.com, do a Google search for a free Forex demo trading account. Let me show you how easy it is. I've used forex.com. Let's go ahead, let's pull that one up here. Go to forex.com. Right here in the middle, it says open an account. If you want to open a live account, go there. If you're not ready, sign up for a demo account. Click your mouse, enter your information, and that's it. There's no cost. There's no cost to do that. So if you want to practice this in a demo account, I can't recommend Forex.com even though I've used them. I'm not allowed to recommend one, but you know what? There you go. There's Forex.com, several different ones that you can do that right here. So that's the next step. Now, you can start practicing doing this. Start practice live trading tomorrow at 5 o'clock Eastern Time. The markets will be back open. You can start going through the London Daybreak, start using your Fibonacci's, practicing your demo account, and start doing this. So try it out for 14 days. Take the next 14 days for $1. Take it for a test drive, and then attend that live training class every Friday here. So our goal here is that to put this all in your hands. I kind of refer to this as my Quick Start Forex program. Everything I showed you here today is included as part of this trial. The charting, those video lessons I showed you, the lessons on the charting and the London Daybreak, everything is included here. So I'm also going to pull up right now. You might want to do a screenshot of this or write this down. I think you get this when you log into the back end. I'm about to run out of time, but if you have any additional questions about this or any of our education products, this is our customer service number. 800-866-7431. If you have any questions about using this program, this trial, or anything else, give us a phone call or send us an email. We'll reach out to you about that here. So what I'm going to do is I'm going to go ahead and I'm going to walk everybody through. Somebody was just asking about how do you cancel the program. I'll go back in and show you that here in just a second. But more importantly, right now, let me send out the link once again. Some of you are asking, yeah, if everybody could just do me a quick favor, if you're not getting the link or if you have any trouble with that, it looks like Mason and Ethan said they've already clicked on it, they've already processed theirs, great, signed up. Joseph and Liam said they did as well. Andrew says, can you send me the link? Hold on one second here, let me send this out to everybody here. Bam, oops, hold on one second. There we go, so I'm sending this out to you, Andrew, right now. If anybody's still having trouble clicking on that, go ahead and I'll send it to you privately as well. Everybody, you should be either in the questions box or in the chat box there. So what I'm going to do is I'm going to go ahead and bring this to a close. I see some of your questions here. I'm going to see if I can answer some of them here. Oh, yeah, let me go back in here as far as canceling. Let's go back here. In fact, let's go ahead, let's bring this to a close. Is you either see the value in this or not. You see the value in taking this for a $1 test drive, or you don't. So let's go ahead. Once again, this is only for investor inspiration. It is only for today. It's a 14-day trial for $1. Once again, take it for a 14-day trial. It's only going to cost you $1. Decide if this is something for you. Set up a demo trading account. You're going to be getting all these different lessons for $1. It's well worth $1 to take it for a test drive to see if this here. Everything's included. In fact, actually, yeah, John just asked here, is the Turbo Trader included with this? Yeah, John, I didn't realize that the Turbo Trader was included with the trial. So yeah, you're getting the Turbo Trader as well. There's actually, I think, about 4 or 5 different systems. You're getting that RSI stochastic. That's included as part of the trial as well. So literally, my friends, everything I showed you, the charting, these video lessons. In fact, yeah, somebody, Asher just asked about the video lessons. Let's pull those back up. So you're going to get this video lesson, the London Daybreak trading strategy. That's coming to you from Josh, the creator of the strategy. It's a detailed video going into more detail than what I showed you about this. You get that. You get the video lessons from Josh going through teaching the Fibonacci's, how to use the charts, how to set up the Fibonacci's, that sort of thing. All those different video lessons. Plus, you can also reserve your spot for the 10:30 a.m. Friday live sessions. All this is included as well. Now, somebody just asked, I think that might have been Henry, asked about how do you cancel? Well, right here, see that link? Cancel my ultimate charting software subscription. If during those 14 days, if you decide this isn't for you, cancel it. It's cost you $1. Now, review everything about that, because you also, if you choose to go beyond those 14 days, you won't be getting locked in on a long-term contract. We'll lock you in on a month-to-month basis for the $59 a month that's here. So what I'm going to do right now is I'm about to bring this to a close. Michael says, what do I do with this link? Michael, click on the link, and you can activate your 14-day trial here. In fact, let me send that out. Yeah, if anybody's having trouble with the link, let me send this out right there. Click on that link right there. Register for the trial. It's going to cost you $1. I mean, like I said, you either see the value in this, if you can see yourself learning this, if it's something easy enough to do. I just taught you a trading strategy. I showed you how to quickly analyze the market with the tools. I think it's at least worth $1 to do that here. So what I'm going to do right now is Jeff asks, what's a good place to set up a demo account? Jeff, I'm not alive. Forex.com has been one of my brokers. Forex.com. If you go to their homepage, click right here. Not ready for a demo. Not ready. Sign up for a demo account. You click on this right there, Jeff. And once again, this is free. There's no cost to sign up a demo account. You can do it all right there. Now, there's also OANDA. OANDA. Some of our analysts here, they use OANDA, but all you really need to do is just simply just a Google search. And that's it here. Now, yeah, so yeah, actually, Jacob just brought up a good question. Jacob just asked here about do we have to be a student? No, once again, you don't have to be a student. This is only going to cost you $1. You don't have to sign up for any of our education programs to get this here today. This is only for investor inspiration. So I suggest go ahead, sign up for this here today, and just like that. So I'm about to bring this to a close. A couple of you asking. Jay says he signed up. Bilal says he just did it as well. And I got Ricardo's asking for the link. So Ricardo, go ahead. I'm going to do that here. So I'm going to stick around for about 1 more minute. Let me send that out to you, Ricardo, here one more time. Here we go. There we go. So here it comes to you, Ricardo. If anybody else needs the link, I can send that. Hold on 1 second. There we go. So here comes Ricardo. And on that note, my friends, I got to go because I've gone out of my way. So if you see the value for this, there you can go. There you go. So yeah, if you're having trouble with the link, let me know. I'll stick around here for about another 30 seconds after the end of the webinar. So on that note, my friends, I wish you the best. I hope you find the value in this, and maybe look forward to you actually becoming an MTI student at some point. I'd love to have a lot of you as students. A lot of you asked some good questions here. Yeah, Suzanne and Toby, I saw you just typed in there as well. Paul, thank you for that. So on that note, thank you, Investor Inspiration. I wish everybody a good day. I wish you the best in your new Forex trading career. Have a good weekend, everybody.